Hey guys, good afternoon, everybody. Today is Monday, December 16th. It is 2 o'clock right now. Our scheduled session is for 2 o'clock, so we're just on time. I'm going to go ahead and set up this room real quick. And once we're done setting this up, we'll get started with the day 4 of our futures day trading mastery class. So let me just get all this stuff uploaded real quick. Shouldn't take too long. One last thing. And it looks like we are good to go. So let me get this link sent out to you guys here in the premium. The link is sent out. And it looks like we are good to go. So I'll get a few moments for people to make their way in. And then we'll get started shortly. The criteria up here for the other breakouts. PRB. I don't think I have the criteria here for the PRB. Good. See if I can pull it up. Before we get started. There's no video for it. All right. So we might hold off on the PRB. Let me see if I can put the criteria together real quick. Let's see, so price push away. Yeah, I'm gonna take off the PRB for now. We can probably cover that at a future time, but I think as of now, it's not really one that's covered anyways. We don't really take that entry. All right, guys, good afternoon, everybody. Today is Monday, December 16th. It is 2:04 right now. Our scheduled mentoring session for today is for 2 o'clock. So we just give it a few more moments for people to make their way in. If people start to join in a little later, it's completely fine. Everything here will be recorded. So, all right, guys, welcome to day 4 of the Futures Day Trading Mastery class. For this specific day, we are going to be covering Module 6 and Module 7. So for Module 6, we'll be covering the sideways strategies. There's only 2 main strategies that we typically apply. I don't really apply sideways strategies very much. I do have other sideways strategies, but for the most part, I'll just cover these for today. Then once we're done with Module 6, we'll move on to Module 7. I think this is one of the the one that's of main interest for everyone, because this covers the breakout strategy. I said I wasn't going to teach the breakout strategy that we've been taking in the mornings, but I will be covering it here, just like the basic gist of it. Of course, there's going to be other models that I follow, but I'll give you the basic gist of like what we're following with the momentum breakout on open. So we have momentum breakout, we just have regular breakout, breakout V2, and breakout V3. These are the main breakouts that typically come up on open. So we'll cover these for today, and then coming back next week, we'll wrap up this mastery class with risk management, trade psychology, and how to trade like a business. I've kind of thought about it today, and I think moving forward, I'll provide a service where I will basically help you set up your business. I know a lot of people are moving forward for 2025 want to trade as a business, which I highly recommend you do, because you'll be able to write off a lot of things like any type of subscription you have. If you have a Kodi Kai subscription, that's a write-off. Your trading view subscription, your computers, your trading, anything that has to do with trading, you'll have a solution to take those deductions so that you don't have to pay as much in taxes at the end of each year. So I will cover this stuff next week, but for this week specifically, we're going to be covering module 6 and module 7, which are sideways strategies and breakout strategies. Again, we'll review strategy types again real quick, just so that you guys understand the difference between these two. But for the most part, we're going to be covering module 6 and module 7. So looks like whoever planned on being here is here so far. I know this is middle of the day, so it's kind of hard for people to get on this this session. So it will be recorded if you guys want to rewatch this in the future. And if anybody wants to watch this later, feel free to check it out. But all right, we'll start off with, let's do a quick review of strategy types. So looking at strategy types, there are 3 different types of main strategy types out there. So main strategy types, which will be 1, directional strategies, which we covered last week. Sideways strategies, which we will cover today, and breakout strategies. These strategies, they kind of vary with regard to market structure. So like depending on what type of market structure that we're currently in, it'll relate to, whether it's going to be directional strategy, a sideways strategy, or a breakout strategy. So first, directional market strategy. So basically, during a directional market, you will typically see market going to the upside or to the downside, right? That's typically what you're looking for when you're applying directional market strategies. So basically, when a market's in a directional market, you're going to apply specific directional strategies, which will be something like this. Price will push up, retrace. You'll tend to look for entries on the retracement, and then you'll ride this up higher. Or you can look for entries in between. So there's sometimes going to be entries down here. Like for example, if price pulls back, you can look for a V1 variation, or if price is pushing up, you can look for a breakout V3 continuation. Or if price pulls back like this down here, you can look for a market flow V2, or a pivot scalp, or etc. So basic gist of directional market strategies is when market is going up or when market's going down. Second, sideways strategies. You'll be looking to take these types of entries when market is going side to side. So for example, when price is going sideways like this, you can look for entries that are going up and down like this for your entry type. So again, if market's going directional, you're going to look for these types of entries. When you're looking at sideways strategies, you're going to look for a market structure like this. You can take bounces off the support resistance, or you can take fake outs at the support resistance, stuff like that. And then lastly, breakout strategies. So like for me, mainly, I look at breakout strategies and I look at directional strategies. So you'll see like this is typically what I apply. I'll look for a breakout strategy on open, and then I'll look for a directional market strategy as market continues to progress in that direction. So directional strategies, push to the upside, continuous, push to the downside, continuous, sideways strategies, back and forth, and then breakout strategies typically look for price to break out on open, something like that, or price going sideways and breaking downside to the downside on open. So basically, these are the three different types of strategies that you'll be looking for. Today, we're going to be covering sideways strategies and breakout strategies. Last week, we covered all of the directional market strategies. So if you guys want to review that, we covered this over here, module 5, covered all of these strategies in the last week's session. So moving down to module 6, we'll start off with the first sideways strategy, which is the high-low momentum scalp. If you guys have any questions so far, feel free to hop into the chat and go ahead and ask whatever questions you guys have. Otherwise, we'll get started with the sideways strategies here that you guys can kind of take away. I think right now is a good time to review the sideways strategies, because that's the type of market that we're currently in, right? If you guys have been trading with me for the past couple of weeks, that's typically where we've been at. So let's get started with sideways strategies right now. So let me go ahead and I'll clean up this chart. So let's take everything off. Let's go over here. We're going to start off with module 6.0, which is going to be the high-low momentum scalp. So if you guys have been on the live session, you'll see people tend to call these out. This is a strategy that will tend to apply when the market is going heavily sideways, and it crosses in between the pivots very often. So let me see if I could find an entry here that came up for a high-low momentum scalp. It doesn't come up very often, but when the market is going sideways, it tends to come up, more often than not. So let me see if I can find one here. I'm looking for a higher high or a lower low. Okay, so here's one right here, actually. This was at like 12 o'clock, so the volatility is a little low. I don't think I would look at that one specifically. It's not a good example. This was at like 11. This isn't a great example, but it does the job. So let me go over here real quick, and I will use this as the first example here. So let me see if I could pull up the requirements for the high-low momentum scalp. Got like so many strategies here. I might just create a new one. Oh, here we go. High-low momentum strategy. Actually, that's not the one. High-low momentum scalp. There we go. Okay, so looking at this right here, here are the requirements for the high-low momentum scalp strategy. So we'll start off with step 1. For step 1, you want to identify a higher high or a lower low using the high-low indicator. So let me put the required indicators up here real quick. Scalp required indicators. So first, you want to have the high-low indicator. Momentum indicator. And I think that's about it. So in order to apply the high-low momentum scalp strategy, you're going to need the high-low indicator, the momentum indicator, and the pivots indicator. This is a sideways strategy. It typically applies well when the market's going back and forth. So looking at this here, the first requirement is that you identify a higher high or a lower low using the high-low indicator. So looking at where price is currently at right now, we have a lower low, which is right here, right? Once you have that, that's going to be step 1. So the step 1, first identify a higher high or lower low. There's a lower low right here. And since there's a lower low, you're now going to be looking for a buy entry. The logic behind the strategy is that you're looking for price to establish a floor or a ceiling. So see how we have a higher high right here, and price comes down super heavily. Right here, you have a lower low and you're looking for price to push right back up. That's why this strategy is meant for a sideways market, because when you identify the top or the ceiling, you can identify this as a top and write it back down. And then when you see the bottom right here, you can write it right back up. So that's what it's meant for. It's meant for a market that goes back and forth like this. So, all right, going back to step one. So step one, identify a higher high or a lower low. We have a lower low right down here. Second, you want to identify a valid momentum signal using the momentum indicator. So with that said, we have a momentum signal right here. This is a valid momentum signal because it's a green buy signal with a green candle within it. If it's a green buy signal with a red candle, that makes it invalid. But because it is a green candle within a buy signal, this is going to be valid. Vice versa, if you're looking for a sell signal right here, it needs to be a red candle within it to become a valid signal. If this was a green candle within a sell signal, this would be considered invalid. So going back to step two, identify a valid momentum signal using the momentum indicator. As you can see right here, we have a buy signal with a green candle within it. So this is a valid buy signal. Going back to the requirement, step one, identify a higher high or lower low. Right here, we have a lower low. Step two, identify a valid momentum signal using the momentum indicator. We have a valid buy signal right here. Step three, you want to confirm that price breaks and closes past pivots 1 and or 2 using the pivots indicator. So I'm going to turn off the other pivots here because they're just not necessary at the moment. So we're only looking at pivots 1 and 2, right? So I turned off 3 and 4. You can see these two lines right here are pivots 1 and 2. The green pivot is pivot 1. The blue pivot is pivot 2. So again, looking at the requirements, step one, identify a higher high or lower low. We have a lower low right here. Step two, identify a valid momentum signal using the momentum indicator. We have a valid buy signal right here. Third, you want to confirm price breaks and closes past pivots 1 and 2 using the pivots indicator. So this candle right here is breaking and closing past pivots 1 and 2, right? That's going to be steps 1 through 3. Once steps 1 through 3 have been met, going to step 4, you can enter on the close of the valid momentum signal. So right here is the valid momentum signal. You'll enter the buy right here. You'll use a 1030 TP stop loss. We've kind of changed this a little bit. So originally it'd be a 1030 split. That's typically what we would apply. But if you want to go for a 30-30, like a 1-to-1, you can do that. The TP stop losses are just really up to what you guys want to do, right? Right here it says use 1030, 2550. Now you can use a 30-30 because back when I created this strategy, we didn't have a trailing stop. You couldn't really trail your position like we do now because MT4 just didn't have that function. But now that we're on NinjaTrader or Tradevate or whatever platform you're using, you can use a trailing stop feature. So typically what I would do is I would go for a 30-30 now, and I would have a trailing stop at the 10 points. So with that said, here is the setup. Again, I'll go over the requirements real quick. Step one, identify a higher high or lower low using the high-low indicator. We have a lower low right here. Step two, identify a valid momentum signal using the momentum indicator. We have a valid buy signal right here. Step three, confirm price breaks and closes past pivots 1 and 2 using the pivots indicator. So this candle right here broke and closed past pivots 1 and 2. Step four, enter on the close of a valid momentum signal, which would be right there. And third or fifth, sorry, I got the numbers mixed up. Fourth, enter on this candle here, and your TP stop loss for step 5 would be set to either 1030, 2550, or in a situation like this, I would just do 30-30 and then use a trailing stop at the 10 mark. So here's the entry. Let's let this run through and I'll show you guys how it plays. So price runs right there. It's currently active. It pushes up a little higher, and eventually hits TP right there. Right, so again, the logic behind the strategy is that we identified the floor right here, which is the lower low. We identified the momentum that was going to confirm that price is likely to push up higher, and then we rode this up to the push that we were expecting. So there goes an example of a high-low momentum scalp. Like I said earlier, this is good during a sideways market. You can see whenever price goes back and forth like this, it works out very well if you have the setup that comes up for you. It doesn't happen very often, but when it does happen during a sideways market, it typically indicates that a breakout's going to happen or a push to the upside like it did right here. Let me see if there's another example here that I can show you. I think this would be one right here. This isn't a great example because just the time of the entry. Let me see if I could find one that where like there was actual volatility in the market. Okay, so I mean the volatility here is a little low, but I mean it still meets the criteria. So let me see if I could go back over here. So here's another example that happened today as well. These are examples from today. Market was obviously kind of slow, going sideways. If you guys were on the live session this morning, here goes another example of the same strategy that we just covered. So step one, identify a higher high or a lower low. You can see over here, we have a lower low. Step two, identify a valid momentum signal. It's a valid momentum signal right here. It's a buy signal with a green candle within it. Third, confirm price break and close past pivots 1 and 2. You can see price was below the pivots right here. It pushed above, past it, and closed. That's going to be step 3. Step 4, enter on the close of the candle. And step 5, set your TP stop loss to 1030. I mean, if you want to do 1030, that's completely fine, guys. That's what we initially used to use. But if you want to go for what we're doing now, typically I'd go for a 30-30 with a trailing stop at the 10 mark. And this would be the setup right here. So lower low, valid buy signal, enter on the close of this candle, TP stop loss set to 30-30 or whatever you guys want to set it to. For me personally, I like the one-to-ones, and I like to set my trailing stop so I can guarantee profits, if price ends up turning on me. So here's the setup right here. There goes the trade. Retraces back a little bit for some drawdown. Pulls back a little bit. And again, like I said, this is a sideways market, so it's kind of slow, but you can see here eventually price does correct back up. And eventually climbs up higher and hits TP right there. I mean, it took quite a bit some time for it to hit. Usually this will like go straight up. Like this will usually hit right away. But for the most part, market's been super sideways lately for the past 2 weeks. So it takes a little bit longer for it to kind of play through. Let me see if there's any more examples from today. If there's not, then again, that's completely fine, but this is just not the best market to show you guys examples. Obviously, if you guys want to back test this, you can go back and just like go back through the chart. Again, I don't think today was like the best day to look because the market volatility is so low. Looks like there's another one like right here. The volatility was higher. So this is around 8 o'clock, or this is around our live session time. So the volatility is going to make more sense right here. So again, same thing. Right, we could even start from here. There's 2 entries that came up right back to back. So this is actually a good time to look for these entries because the volatility was a lot higher. So let's go over here real quick. I'll show you 2 examples. This is a better time to look at examples because this is when the market was actually volatile, and you'll see that the entries hit like quicker this way. So here's an opposite direction for a sell now. Identify a higher high or a lower low. There's a higher high right here. Second, identify a valid momentum signal using the momentum indicator. We have a valid sell signal right here. Confirm price break and close past pivots 1 and or 2. Price broke and closed past pivots 1 and 2 right here. It was above, and this candle pushed past it and closed right below the pivots. Step 4, your enter on the close of this candle. Your TP stop loss again will be set to, whatever you prefer. Again, I like to use 30-30 with a trailing stop. That's the setup right there. And again, the logic behind the strategy is that you're identifying the ceiling, right? You're identifying the top. So price pushed up right here. We identify the ceiling, which is the top. And now we're looking for price to push back to the downside. We'll let this trade run here. And there we go. So price climbs lower and breaks right through. So there's a full TP right there with little to no drawdown. Now we're looking for the opposite direction, right? We're looking for a lower low, and we'll look for price to push the other way. So this is a good example because you can see price push both directions here. Now we have a lower low right here, right? Same requirements. Now you're looking for a valid buy signal. So right here, we have a lower low. We have a buy signal right here that's valid. It's breaking and closing past pivots 1 and 2. So we have the perfect setup right here. We have the setup from the top. Now we have the setup from the bottom. Lower low, valid buy signal. Enter right there for a buy. And then same situation, if you want to do a 30-30 or a 10-30, it's just really up to you. You have it set to a 30-30 right there. Let the trade run. Pushes up in profit. And there you go, full TP. So see, when the volatility is high, What you would need volatility regardless, but this works in a sideways market. You can see how the market here is going back and forth. So initially over here, market was going sideways, broke out, and then went into a huge range right here, right? So this is the type of strategy that you would use in a sideways market. And you can see here it worked out perfectly. You identify the ceiling, price push through, identify the floor, price push through. And there goes a clear example of the high-low momentum scalp strategy. So if you guys have any questions, feel free to hop into the chat. I'll answer whatever you guys need help with regarding this. Otherwise, if you guys have no questions, we'll move over to the next strategy, which is a consolidation variation, CV pattern. Again, I typically don't apply sideways strategies. I mean, they're there. I've applied them in the past, like when necessary, but for the most part, I personally am not a sideways trader. I like to trade directional. I like to trade breakouts. So these strategies, although they're available and although they're good and they work, I typically don't look for these. I usually just sit out of the market when it's going sideways. So we're all done with the high-low momentum scalp here. Let's now move over to the consolidation variation pattern. So let me see if there's any examples here before perfect. There's one like right here. So let me put the requirements here for the consolidation variation. And so we're moving on to module 6.1, which is a consolidation variation. So now that we're at 6.1, let me go and put the requirements here for the strategy. So required indicators for consolidation variation strategy. Very similar to like what else is required for other strategies. You need the high-low indicator. The momentum signals aren't like super required, but I mean, obviously they'd be useful. Other than that, let me see if there's anything else that we need here. Pivots indicator. So I'll put over here momentum indicator, optional, and fourth trend meter, optional. This stuff just helps when you're identifying the trend. So, all right, starting off with the requirements here. So first you need the high-low indicator to identify the highs and the lows. You need the pivots indicator to identify the trend. You need the momentum indicator to identify direction of momentum. Not necessary, but helpful. And then you need the trend meter. Well, you don't need it, but it's optional to identify the trend as well. So the reason why I say the momentum indicator is useful is because you can look at the direction of price. So let's start off with the requirements here. So the first requirement for a consolidation variation strategy entry is going to be identifying the trend using the pivot. So you typically want to take this strategy only when the market is trend, not really trending, but you want to look for a direction of trend because you want to have some sort of bias in the market. So let me turn on all the pivots here. Again, you can see here that the trend is bearish. The reason why the trend is bearish here is because price is below the pivots and the trend meter is red. This is why I say it's optional to have the trend meter, but it does help because you can have a double confirmation here. So basically you're looking for price to be biased in some sort of direction so that if you have that bias, you know exactly which direction to be trading in. So you can see here that price is below the pivots, trend meter is red. This indicates that price is likely to continue dropping. So the reason why this is important is because if price is going sideways, you want to have some sort of bias, right? Like for example, if you have a bearish trend and price is going sideways, I'm typically going to look for the sells only. Because even if I make a mistake, the trade will probably still go in my direction because I'm going in the direction of the trend. Vice versa, if price is trending to the upside, and let me show you real quick. So price is here going sideways, but even though price is going sideways, if I'm looking for buys here, if I'm taking a buy here, I'd be more lucky to take a buy here because even though I make a mistake, even I get an entry right here, price is likely to push up because the trend here is bullish. So again, going back to the requirements, we'll go back to step one. Step one is identify the trend using the pivots. So price again is below the pivots. Pivots are angling down, they're spread out. This indicates that price is in a bearish trend. So when you identify the trend, now you look for sells here specifically. Second, you want to identify a variation reversal pattern, either a double body or a double wick pattern. So you can see over here on this specific high, we have a double body pattern, right? This means that these candles closed out on the same level with regard to body. So this here is going to be an example of a reversal pattern to the downside. You have a push to the upside, you have a high, and you have a double body rejection right there, right? Vice versa. See, there's a low right here. This is a double body rejection. This is a reversal to the upside. So reversal to the upside, reversal to the downside, right? This you wouldn't take because price was in a obviously bullish trend or bearish trend. And then again, right here, you mainly look for a sell because you're looking for price to move in the direction of the trend. So with that said, again, step one, identify the trend using the pivots. We're in a bearish trend right here. Step two, identify a variation reversal pattern, either a double wick or a double body. You can see there's a double body rejection right here. And with that said, now you're going to confirm that the second candle is smaller. So the logic behind this is that this is very similar to like an engulfing pattern, but you're looking for an opposite engulfing. So instead of looking for the second candle to be bigger, you're looking for it to be smaller. And the reason for that is because you're looking for price to push down a little further from where it's currently at, right? You're looking for this basically to show that price attempted to push below, but it didn't push far enough. So you have enough space right here to recoup whatever push is left of this move, right? So once you have this set up right here, going over the requirements, identify the trend, it's bearish. Second, identify the variation pattern, it's right there, reversal pattern. Step three, confirm the second candle is smaller. It's going to be obviously smaller. This candle right here is smaller than the second candle. And fourth, you can enter on the close of the second candle. So the entry would be right here. Your TP is going to be based off volatility. So, I mean, kind of depending on like what you want. Again, I said before, like, you know, typically we would go for like negative risk to reward. But because we can set up a trailing stop, I would typically just set my TP stop loss at 30-30. And then I would just have my trailing stop at 10 points. So what would happen here is if price drops to 10 points, my stop loss gets moved in profit, but I can go for the full 30 points. So here goes the setup for the consolidation variation. Once this candle is closed, you enter the trade. Price pushes down, and you can see right there, it filled the rest of this move, like I just said earlier. And it pretty much wiped it out. And it went straight to full TP right there with like little to no drawdown. So there goes an example of a consolidation variation entry. I'll see if I can find another one here. I don't think there was very many. Because again, like I said, the volatility here is very low. It's been low lately, so I just didn't see any. This is against the trend, so I wouldn't take it. The volatility here is too low. Let's go back to like when we're like live session time. Actually, there's an example right here. So here's a tight example, but it's not. It's like super tight, so I probably wouldn't take it because you can see the volatility here is low, but this is just another example for a sell. So, and also this candle here is not that much smaller than the other one, so it'd be kind of harder to read if you're watching this live. But again, identify the trend using the pivots. We're in a bearish trend here. Price is below the pivots. Pivots are angling down. The trend meter down below is red. We have a bearish trend. So bearish trend right here, we're only going to look for sells. Identify a reversal pattern. There's a double body rejection right here. Third, confirm the second candle is smaller, or the second candle is smaller. So we have a double body rejection. The candle following is smaller than this one. So you're looking for price to push down further to fill this gap right here, basically. Right, you're looking for it to push down and fill this gap right here. Third, you're going to, or fourth, you're going to enter on the close of the candle. So the candle closed right here. Again, looking over the requirements, step one, bearish trend. Step two, reversal pattern, double body rejection right there. Step three, confirm the second candle is smaller. This candle is obviously smaller. Step four, enter on the close of the second candle. So again, right here, we'll enter when this candle closes. TP stop loss is based on volatility. I mean, if you want to set it based off the ATR is 13. So if you want to do a 15-15, that's completely fine. But again, for me, I typically like to enter with a 30-30 with the trailing stop. I have that set up right there. Now I let the trade run. Takes a while to hit, but eventually price comes down. So this is why I wouldn't have traded right here because this is at 847. The volatility is too low around this time. I want to trade when the market's like volatile. So let me see if there's another example over here where like, um, where it'd be entry worth taking. I don't think there was any consolidation variations today. No, there wasn't. Yeah, there wasn't any during the live session. So anyways, there goes the examples right there. If you guys want to see more examples, just let me know. But for the most part, I'm just showing you guys how this works. If you guys want to go and back test this and just identify entries on your own, feel free. I'd probably go back to a different day that was more volatile, but you can see an entry came up right here. The example that I showed you and a couple other examples over here as well. This is just the basic gist of it. Of course, you can go deeper into a deeper dive and just go back to previous days and look for entries. But you can see over here, entry came up right here for a CV pattern. And that's what I call it. During the live session, you'll hear me call it a CV pattern. And this is what the CV pattern is. And this strategy is the second strategy in our list for like the more popular sideways strategies. It's either this or the high-low momentum scalp. Again, right here, another example, but this would have happened like closer to market close. I wouldn't have been trading at this time. I usually only trade between 640 and 7. So there was an example of the consolidation variation. And if you guys have any questions, feel free to hop into the chat so I can answer your questions. Otherwise, we'll be moving on to the breakout strategies, which is, I think this is more important because most people only apply the same strategies that I'm typically applying, which are going to be directional entries and breakout strategies. So I'll be showing you the requirements for the breakout that we take on open. It's a very, very simple strategy. There's different ways to apply it. But this is the first time that I'm going to be introducing and explaining to you guys what I've been doing every morning for the breakout. As you guys have seen for the past couple of days, past couple of weeks, market's been very choppy. So the original TP stop loss isn't going to be ideal, but you can always make adjustments to take the smaller TP if that's what you guys want to, or if that's what you guys want to like. There's so many different ways to apply it. I'll show you the way how to apply it. And then the main difference that you can change for a lot of these entries and strategies is the TP stop loss. That's all you need to change. Because sometimes we're in a volatile market, sometimes we're in a choppy market, sometimes we're in a whipsaw market. Right now we're in a choppy market. Market just whipsaws on the open, either direction or peel flop. So the easiest way to improve on that is just to adjust your TP stop loss so that you don't get whipsawed out. So anyways, there goes the consolidation variation strategy. We're now going to move on to module 7, and we'll start off with the momentum breakout, which is what I take every morning on market open. So I think what I'll do is I'll go to a clean chart here because this doesn't really require very much. This is a very, very basic strategy. It doesn't really require anything at all. I think you guys will if you guys have been around for a while, you guys obviously would and do like the breakout entries because they're pretty straightforward and they go pretty quick. All right. So let's start off with the momentum breakout. This is I haven't really taught this strategy. I didn't even plan on teaching this strategy, but I figured for this session I might as well just cover it because I do have different models. This isn't the only model that I use, but I'll just show you guys. And there's 2 different ways of applying it. So let's have a breakout strategy. So it's super, super simple. Firm. It doesn't have to be valid. So identify. But that's kind of all you need for momentum signal. That's your position. 50. Uh, 50, 50, 100, 100. Okay, so here we go. Today's date 12/6, 16. I'm gonna put the dates on these so I know, when I update these because I never know when I update it. So the strategy is extremely, extremely simple, guys. I mean, all you need to do is identify where momentum's at. So now let me put the note over here as well. I'll put 628 as cutoff. Okay, so like I said, I just rewinded it to 630. So this is where the breakout came up. This strategy is extremely simple. Like all you're looking for is the direction of momentum. It's exactly how the name is, momentum breakout. So you're looking for momentum. You have a sell momentum right here, right? Market's going to open on the next candle, which is 630. So once you have the direction of momentum, this is where you'll be looking to take the entry. So right here, obviously market's going to open. You're going to enter a sell as soon as this candle closes. So at 6:30 a.m., you'll enter a sell right there. Like I said, your TP stop loss is going to be based off market conditions. Lately, the market's been going sideways. So, what we've seen and what people have been applying, I haven't changed my criteria. I'm still using a 50 to 100 TP stop loss, which is a positive 1 to 2 risk to reward. But other people in the group have been cutting it down to 50-50 because the market volatility is very flat. So depending on your preference, I mean, you guys can use this if you want, or if you don't, you can use a different TP stop loss. You can do 50-50, you can do 100-100, you can do 150 like what I'm doing. But I'll do 50-50 for now because that's kind of how the market has been moving lately. And we'll just use this as an example. So this is the entry from today, this morning, momentum breakout. First, confirm momentum signal. There's a sell signal right here. Market's going to open right here at 6:30. You enter the sell position as soon as the candle closes. And then your TP stop loss is based off market conditions. Right now, we're in a choppy whipsaw market. So 50-50 would probably be ideal for this type of market. So here's the market open. Price comes down in profit. Comes back up for retracement. Comes right back down and hits full TP. So you guys see how simple that is? That's literally what you would do. The only difference here, so this is like one direction that you would take. The other thing that you can do is if this type of direction isn't working, you can do opposite. So there's just two different models that you can follow that make things very simple. It's either you take momentum or you take opposite momentum. So for example, if the momentum has been hitting, you're like, okay, great, I'll just stick to momentum. If this starts to lose a lot, then you're like, okay, I'll just do opposite. So when you're doing opposite, when you see a sell momentum here, you're just going to take a buy instead of a sell. So you guys see how that makes sense? The logic behind it is if price isn't going the direction of momentum and it fakes out, then you should just flip it, do the opposite. The only difference here is, I'm not going to put the requirements here because it's just going to be so, or I guess I could put it there. Let me see, note. The other note is, and this is important because, we follow this. If candle is too big, let me see, if 629 candle is bigger points, flip position. So this is, again, another important thing because this makes all the difference with the position. So you're basically flipping it like it's going to be an opposite move. So like I said here, the gist of the strategy is taking momentum breakout. But if you want to flip it, like say, for example, the momentum is just not working, right? And you're just losing a lot of trades. Then you want to flip it the other way because obviously that's going to work in your favor. The only other time you would flip it is if this candle here is too big. So obviously, let's just go back over here. Candle wasn't that big, right? If you measure the candle right here, about 26 points. That's fine. If the candle's huge, like 50 points like this, then you don't want to flip it. Like say, for example, price is you're entering a sell and price is already down like 50 points. At that point, it's like past your TP. So, price would be overextended at that point and you want to do the opposite and just flip it the other way. Doesn't always work that way, but I mean, that's the only other way of like flipping things. Otherwise, if you're doing the opposite trade. So there goes an example of the momentum breakout for today. Let me see if I can pull up yesterday or the one from Friday. I don't think the one from Friday, I mean, it didn't hit. I know it didn't hit because obviously market volatility has been going sideways. Let me show you the one on Tuesday. So I think the one on Tuesday actually worked, or didn't it? Now, actually, there hasn't been an entry that has hit since like Friday. So let's go to Friday. Let's go to Friday, December, because I just want to show you a full move where I typically go for the full 100. So again, this is the strategy I apply every morning. It's such a simple strategy. Like all you need really is my momentum signal, because my momentum signal tells you the direction of price. Again, this like typically works well during consistent markets. Right now, we're not really in a consistent market. So again, right here, I'm going to use the 150 TP stop loss because that's typically what I use. And right here is the entry. So this is Friday, December 6th. This is the last time that the entry actually pushed in a direction. All last week, it kind of went both ways. So it would whipsaw both directions. But I think this is the last time that it kind of went directional before markets started going sideways a lot. So again, same thing. You're just going to confirm the momentum signal. It's a very simple strategy. You're just looking for momentum. So right here, we have a sell signal, right? Since we have a sell signal on open right here, we're just going to look for a sell. That's going to be the main thing to look for. So as soon as this candle closes, the 629 candle, you would enter a sell position right here. And the TP stop loss that I use during the live session for my own accounts is 150. The reason why I use a positive risk reward like this is because if I ever lose a trade, then when I win the next trade, it's going to give me back it's going to recoup my loss. And then on top of that, it's also going to give me a win on top of it. So I basically have to win. I would only have to win like twice a week to be profitable for the entire week versus having to win like, 3 out of the 5 days. So with that said, this is typically the entry that I would take with the TP stop loss. Obviously right now I'm going to risk off, so I'm not taking any of the trades. I'm just waiting for a win before I take the next one. But again, here, you're just looking for the momentum signal, which is a sell signal. Market's going to open on the next candle, which is 630. And then your TP stop loss is based off market conditions. So right here, my TP stop loss would be 100 TP, 50 stop loss. See how price got kind of close to stop loss right there. And then eventually it made its way. I mean, it took a while, but eventually it made its way down. This thing took a long time, actually. Yeah. So you can see this is where the market started to move very sideways. Like this is not a good entry because, well, I mean, it wouldn't matter because it's just not a good market. I wouldn't say it's not a good entry because this entry would come up every day, but it's not a good market because typically for the breakout, it hits right away within the first couple of minutes, if not the first couple of seconds. But you can see this trade over here ran for about over an hour. It's no longer a breakout at that point. So like I was saying before, if you want to adjust your TP stop loss, if you moved it down to 50-50, like you would hit your TP way earlier, right there, that's like the main adjustment that you can do for the strategy. If you don't like the big TP, then you can just adjust it, use a 50-50 instead. Or I mean, if you want to be super, super safe, you can do 100-100. Like this thing, obviously you're still waiting for that 100-point move, but it would save you a lot more because your drawdown is like so far out. You can eat drawdown before price comes down. So for me personally, this is what I use. I use a 150 TP stop loss so that I only need 2 wins per week. If I can win twice for the week, I'll be up in profit regardless of how many losses I take. But because the market's been going sideways and choppy, I haven't been able to take any entries. I think the only other time that it came up, let me see if the other day where it came up and it moved where I was supposed to was on the 4th. So let me see if this was an actual good breakout entry or if it was just, slow like it was right there. Let's go back to the 4th. 6:30. Okay, so looking at this right here, again, same thing, an example of the breakout, super, super simple. Um, Here's a momentum signal. It's a buy signal. It doesn't have to be valid. It just needs to be a momentum signal. So like I said over here in the notes, 628 is the cutoff. This is a 628 candle. So since we have that right there, we're going to be looking for a buy. So market opens right here at 630. As soon as the 629 candle closes, you enter a buy position right there. My TP stop loss that I typically apply is 100 TP, 50 stop loss. There is the setup. Again, this is really hard to screw up, guys, because all you're doing is you're looking for the momentum. You have a buy momentum there. That's why we're looking for a buy. Just kind of tighten this a little bit. Yeah, so we have a buy momentum. As soon as the 629 candle closes, you take a buy. TP stop loss is based on market conditions. This was when market was still moving kind of directional. So now that we have it set up right here, you would let the trade run. And you can see right there on the third candle, it pushes up very hard. And this is how it's supposed to hit. So the breakout is typically supposed to move like this. You want it to hit within the first couple of minutes. That's the whole point of the breakout, right? You don't want it to be going back and forth for like 30 minutes to an hour because it's no longer a breakout at that point. It turns into a day trade. This is usually how the breakout hits. We're in the middle of like holiday season. So like the market is now going back and forth. But you can see right here, it didn't really matter what TP stop loss you used. For me, I used a 100 TP 50 stop loss. If you used a 50-50, it still would have hit your TP. If you used a 100-100, it still would have hit your TP, right? So like I said here, it's just up to you. Whatever you want to use for your TP stop loss, feel free to use whatever you're comfortable with. I mean, for me, I'm okay with like eating losses here and there. And then when I do have wins, it will recoup wherever I was left at. So if you guys want to see more examples of this, let me know. Otherwise, it's pretty straightforward, guys. Like this is really hard to screw up, and this is the entry that I take every morning on market open. So if you guys are on the live sessions in the morning and you're wondering what trade I take at market open, this is the strategy. It's super, super simple. There's just different models that I use. Sometimes I'll do opposite of momentum. Like if the momentum's not working, I'll do opposite. And then vice versa. The only other difference here would mainly be using the trend. There's like different factors and models that I use, but this is the main gist of the strategy. It's just one thing's changed. Either I'm going the direction of momentum, I'm going opposite, I'm trading depending on the specific day. One thing that I realized how the market moves sometimes is like it's usually bullish on Monday and Friday because people are entering the market from the weekend, so price goes back up as they buy back in. What happens on Monday and Friday is that people either sell off or they buy into the market, right? So market on open on Monday, people buy into the market, so price tends to go up on Mondays. And then during the week, price goes back down because we have that big push on Monday. Price comes back down Tuesday, Thursday, Tuesday, Wednesday, Thursday, and then Friday it goes right back up, right? So like Monday's bought, price will be bullish. Tuesday, Wednesday, Thursday, price will typically drop a little bit, and then Friday it'll correct back up because it'll usually end with the bullish rally before you go into the weekend, and then they sell off at the end of the session. So it just comes from experience, guys. Again, I've been trading YM for I don't know, like 8 years now, 6 to 8 years. So I just understand how the market moves, and I'm able to make moves based off that. But yeah, that's pretty much the momentum breakout strategy that I apply each morning. If you guys have any questions, feel free to hop into the chat. Otherwise, we'll move on to the next strategy here, which would be the original breakout. So the original breakout is a little more complicated, but it's something that we applied a long time ago, and it still works till this day. It's just it's a little more complicated because it's more discretionary versus here you're just looking for momentum. You already know the direction of price. So there goes the momentum breakout strategy. I don't see any questions here, so we will move on to the original breakout strategy. Let me go over here real quick. So the thing with this strategy is that it's I mean, personally, I don't really recommend it anymore because it's just so discretionary that like everyone's gonna see things differently. Um, let me see if I can put the requirements up. Like I would probably opt to like the regular breakout versus, yeah, actually the original breakout strategy is going to be hard to apply because we don't have retail sentiment anymore. There used to be a website that we used to go to that had retail sentiment, but they took the website down. So it's going to be really hard to identify, overall bias. But I'll show you guys anyways. Like we'll see if we could find something. I don't think we'll really find anything here. Let me see if I can find it. Let me see how far this pushed down. So this would be the entry right here. I want to look for an example that actually looks good and it looks clean. So today's entry wouldn't have been good or clean because of the choppiness. I mean, last Friday was super choppy too. So I wouldn't use that as a good example. Give me one second, guys. I'm gonna close my. Yeah, I'm gonna try to find a good example to show you guys, but there just hasn't been good examples lately because the market's been going sideways. If there's no good examples, then I might just scrap this from the list because we don't really apply this strategy. I don't think many people in the group do apply because it's just too discretionary. Like people would see things differently versus others in the group, and it just wouldn't make sense. See the volatility here. No. Yeah, because the thing is the momentum breakout makes way more sense compared to this. This is the strategy that like a lot of people like to apply. I think we used to apply this like around COVID time because the volatility was so high. But because the volatility is like not as consistent, it's yeah, you know what? I'm just gonna scrap the strategy, guys, because the thing is I don't even apply this, and I don't think any like I don't know one person that still applies this. There's way better breakout strategies to apply versus this one. It's just the thing is like, so if you look at requirements, like requirement 4 right here, it says confirm strong candle and directional momentum. The thing with that is that a lot of people they wouldn't identify the same type of candle. So like some people would take buys, some people would take sells, and like there was never really much consistency with this specific strategy. You see the volatility here. Uh, when it does that. Yeah, I think there was one example right here. Not a good example, but I just want to show you guys in case anybody was like curious to apply this strategy in the future. Okay, so we'll use this example right here. Again, like I don't think this is a good strategy, but if you guys want to apply it, we've applied this in the past and I don't know, let's have a trading view today. It says invalid symbol. Back to it. Fresh it. Oh, because we had, okay. You guys see the big gap right here. It's because we changed contracts. YM. Market just reopened. So that's why I had an error right now. Oh my gosh. What happened to the thing? It's 30. And I can't remember what day were we on. My bad, guys. I think it was Wednesday. Oh, what's that there? Oh, there we go. Sorry. All right, so let me just replay to this candle right here. So there's just so many things that were like tricky about this strategy because so we'll look at the requirements here. It says look for entry after New York Stock Exchange open at 6:30 a.m. So market open right here at 6:30, right? As soon as market opened right here, you're supposed to confirm the bias. The problem with the strategy here is that we don't have retail sentiment anymore. This was like one of the main things that we looked at, and this makes it difficult for us to be able to do a full analysis or show you the full criteria because we don't have retail sentiment. You can't check fundamental bias unless it's like the day of. You can't check well, you can check technical bias, but for the most part, the main ones here were these two, and you can't really check these when you backtest. So we're gonna skip step 2. I know it says optional, but highly recommended. This was like it was very recommended. Even though I said it was optional, I would only take entries if these here would line up. The only reason I put optional here is because you can't backtest it. Like you'd have to see it live during live market conditions. But anyways, we'll just skip step 2. For step 3, you want to confirm direction of momentum using the momentum indicator. So market open right here at 6:30, we had a buy signal. So with the buy signal right here, you're going to be looking for possible buys. Fourth, you want to confirm a strong candle in the direction of momentum. So you're looking for a strong candle with like little to no wick on the pushing side. So we had a buy signal here, price pushed up, market open right here at 6:30. You can see there's a green candle right here, but it has a huge wick on top, right? So with that said, this would not be a strong green candle. So there's not going to be an entry there for a buy. Price pushes down lower right here, and then you can see there's a new momentum signal that came up. So since there was a new momentum signal right here, instead of looking for a buy, you're now looking for a sell. As soon as this candle closed right here, you can see it's a strong red candle because there's a sell signal. Plus there's no wick on the bottom, right? So with that said, this here would be an entry for a sell. The entry has to happen within the first 5 minutes of open. So this is why it was difficult too, because sometimes you wouldn't get that candle within the first 5 minutes. Right now, this candle came up at 6:33, so this is a third minute into market open. Once you have it set up right here, this is where your entry would be for a buy, or sorry, for a sell. And then you would set your TP stop loss to 50-50. Once you have this set up like that, that's going to be your entry. And then now you let the trade run. And you can see it pushes down, pushes back up, and then pushes back down further to hit the TP. See, this is a good entry, but because of the requirements, it's actually really difficult to catch because you have to be super, super laser focused or else you would miss this entry. Like if you missed the fact that this was a sell signal and it was a strong candle, you would have totally missed the entry here for the breakout, right? I think this is why like there was like a big split in the group. Like there was half of the people who really liked the strategy because they would always win it. And then there's half of the people who would just complain because they would always miss it. So that's why I don't really apply it anymore because this would kind of ruffle up the group a little bit. Like some people would be super happy because they would make a ton of profit off this, and then there's the other half would be like, this entry is too fast, or I can't keep track, or like, there's always somebody complaining about the strategy. And this is why we typically didn't really apply it anymore. So if you guys want to apply this strategy, I'll leave it up here. But it's not going to be one that I personally apply or one that I recommend people take. There's way better breakout strategies available that we apply in comparison versus this one. So yeah, with that said, this is the original breakout strategy that we used to apply When we applied this like 4 or 6 years ago, we used to do this like every morning. I mean, it worked well to some extent, but it was just too subjective to the point where it was too mixed. Some people liked it, some people hated it. And there was just never a consensus, and that's why I kind of stopped applying it. So this is the original breakout. If you guys want to apply it, feel free to take that. If you guys have any questions regarding this, feel free to hop into the chat. Otherwise, um, we'll move on to the next breakout strategy. I think the next one is even better than this one for sure. Yeah, it's Talonji said there was 2 websites for sentiment. They're both gone. I believe so. Let me check real quick. So US 30. Yeah, they're not there anymore. Okay, so let's see. My FX speculating what? Yeah, not so much. So there was a website that we used to look at. I forget what it was called, but so there's this website right here, Talanji, but I don't think this one is like, I don't think this is a good one because I remember we looked at this one before. So this one still shows up, but the problem with this here is that sometimes you would refresh it and the numbers would change like because it wouldn't update properly. Like sometimes it would say negative, it would say 66% long, and then you refresh and it's like 90% long. So this website is technically still up. The one that was more accurate, which was I forget what the website was called, but it was owned by the same company, IG. Um, that one doesn't come up anymore. The reason why they took it off is because it's not allowed to US clients. I mean, you might be able to apply or use it since you're not from the US, Laundry, but like whenever we try to log on the website, it always gave a warning. If you guys remember, the like typically like if you try to go on it, it would ask you like it would make you check off a box that says this isn't meant for US clients. Check this off if you're not US, and we always click on that so that we can use it. But that website's like completely down now. This one still works, but I don't think this is accurate because sometimes we would open it up and then you click on it and then the number here would just change like pretty dramatically. So yeah, I know it sucks. Ninja Trader is actually coming up with sentiment. So yeah, so Kip over here posted it in the chat. It's not launched yet, but it's going to be coming soon. So it says Ninja Trader launches future sentiment indicator for retail traders. It's not there yet, but this was just posted on December 9th. So I'm hoping like by next year it'll be ready. So it'll have assessments of ES, NQ, YM, crude oil, and gold. So it'll be coming up soon, but it's not up yet. Yeah, it's long as you said, yeah, sentiment still works for me. Makes sense why now though. Yeah, I know it's super annoying because we would use it before. I mean, sentiment was always pretty clutch, right? Because whatever sentiment was, we would do the opposite. Like if sentiment was like 70% long, we would just sell because all the retail traders are buying. Obviously, we would just do the opposite and sell. Um, so once the new sentiment data comes out, we'll start using it. But right now, it's just not available. So unfortunately, that's what we're gonna have to work with for now. So all right, guys. Other than that, let's move on to the next strategy. So we just covered the breakout strategy. We're now going to cover the breakout V2. So for the breakout V2, there was 2 different breakout strategies. When I clicked on this here, this is actually a different breakout strategy. This is for breakout 2.0. I'll cover the breakout V2 first, and then we'll take a look at the breakout 2.0 after. So let's go back over here real quick. I'll just replay to. So let me put the requirements here for the breakout V2. Okay, so this is the breakout V2. Again, this is a very, very simple strategy. This is like I said, there's better breakouts versus the original. Like there's the momentum breakout, which I think is the best. Breakout V2, this is also a really good one. It's very similar to the momentum breakout, but with this, you're looking for the confirmation versus just entering right on open. So looking at this here, first requirement is identify direction of momentum before or after market open. So market open right here at 6:30, right? We had a sell momentum right here. So looking at this here, we've identified that we're looking for a possible sell. The second requirement is you want to identify two back-to-back candles in the direction of momentum. So like, for example, here you have a sell momentum, you're just looking for two red candles, right? So let's go over here real quick. I'll just replay from the market open. So market open right here, in order for you to take a trade for the breakout V2, you need to look for two following momentum candles. It's basically a confirmation that price is going to move in that direction. So see how there's one red candle, a green candle. Now you're looking for two red candles. So we have one red candle, you need one more. This is a green candle, it doesn't meet criteria. This is a red candle, you need one more. This is a green candle. Now that we've switched, so we were looking for a bearish momentum here first. Now we have a buy signal, right? Now that we have a buy signal here, you're now looking for two green candles. So here's a second green candle, but you need another one after it. You can see over here, no momentum signal candle does not count as the one back-to-back candles, must happen after the signal. So we had a buy signal here. You're now looking for a second green candle. There's one green candle, one red candle. Starts over. You have one red candle right there. One red candle right there. We have a green candle right here, right? You need one more green candle to take the entry. There goes the green candle that we're looking for, right? Here's the setup. See, I have a market open here at 6:30, buy signal, green candle, green candle. Once you have that, this indicates that price is likely to push up. So with that said right there, you would enter an entry right here. Your TP stop loss could be based off like whatever you're looking for. If you want to do a 30-30, feel free to do 30-30. Since this is a breakout entry, I'd probably do a 50-50. So the setup right there is 50-50. Let the trade run. Price pushes up, retraces a little bit, pushes back up, retraces a little bit, pushes up higher, and then eventually it comes up and hits TP right there, right? So that's exactly what you're looking for. You're looking for a buy signal or whatever signal it may be. It could be buy or sell, and you're looking for two following candles to follow through with it. Again, your TP stop loss could be 50-50. It could be 30-30. It's just really up to you what you want to do. It kind of depends on the market conditions. So for example, the ATR right here is like 26. So I probably would have went for 30-30 instead of 50-50 because the volatility was just a little low. So, you guys might remember this, might not remember this. This is a very old strategy. We just haven't really looked at it in a while. But there goes a breakout V2. Super, super simple. Let me see if there's another one for the previous day. So let's look at Friday. I don't think this one here will play through, so it wouldn't be a good example. Yeah, I wouldn't play through. Let's go to Thursday. So I'm showing you guys different types of breakout strategies. I mean, one of them, the original breakout or the momentum breakout is good because you just enter right away. You don't have to wait for anything. For this one here, if you're a little more patient, you can wait for this entry to come up. Obviously, it works very well too. But again, it's really just up to preference. The thing is, the market's been choppy lately, so I don't think there's been really many good breakout strategies that have come up. So, sell signal. That's not a good example. For the most part, the breakout entries in general have not been good because the market's just super choppy. So you're probably not going to see very many good examples right now. For the past 2 weeks, market's been super choppy, so there hasn't been very many opportunities for these breakout type entries. Okay, so I think there might be one right here. Here's Wednesday. I probably would use a positive risk reward type criteria. So I probably use like a 30-60 or maybe even a 50-100 because it's going to be hard to recoup if you're in a sideways market like this. But again, market open right here at 6:30. So at 6:30 right here, I'll just put a line. We got a buy signal. Starting from 6:30, we're looking for 2 green candles. There's no 2 green candles here. There's now a sell signal. So now you're looking for a sell. You have a sell signal come up. You have 2 red candles right here. Again, your TP stop loss is just up to you guys, right? The ATR is 30-32. So I'd probably go for the 50-50 here. I'd go for something bigger instead of the 30-30. But again, it's just really up to your preference. So if you want to do the 50-50, you can set that up. If you want 30-30, you can leave it at that. This is what the 50-50 looks like. Or if you want to do a positive risk reward, you can do a 60-30. That's one. Or if you want to do what I typically do, 150, you can do that as well. It's just up to your preference because the market's always going to be slightly different. Some people like to do 1-to-1, some people like to do 1-to-2, some people like to do negative risk reward. It's just up to your preference. So right here's where the setup would be. Take the trade after here because there's a sell signal, 2 red candles. Price comes down. It takes a while, but eventually it does hit. So if you wanted to do a 100 to 50, you can do that. If you wanted to do a 30-30, that would have worked too. If you wanted to do a 50-50, that would have worked too. If you wanted to do 100-100, you can do that too. It's just really up to your preference what you want to set it up with. For me, ideally, my ideal TP stop loss would be something like this, a 1-to-2. If you wanted to do 1-to-2, but on a smaller spread, you could do a 30-60. Either way, they all would have hit, regardless of the fact. So there goes examples of the Breakout V2 strategy. If you guys have any questions regarding this, feel free to hop into the chat. Again, this is a very old strategy. I actually forgot about this strategy because I haven't really applied it. I've just been sticking to the regular momentum. But if you guys have any questions regarding this, feel free to ask away. This is going to be on the list of the strategies here. So it's going to be very useful to know them. Because you can apply whatever breakout you like. If you want to do the regular momentum, you can do that. If you want to do this breakout, if you want to do multiples, because the thing is you can take the momentum breakout, and then you can also look for the Breakout V2 after the market's opened. And then if you want to take a Breakout V3, you can do that as well. So there goes the criteria for the Breakout V2 strategy. I'm kind of curious to go back and test this again because it's been a long time since I used it. So I may go back and then look for for possible setups to see if this is a good one to kind of switch out with the one that we're currently applying as we kind of figure out how the market starts to move as we get into a volatile market. Because right now market's going sideways, so I think waiting for confirmation might be better. But we'll have to see what happens over the next couple of days because the market may shift as we get closer to New Year's. So there goes the Breakout V2 strategy. Now we're going to wrap up with the Breakout V3. Pretty much everybody here knows the Breakout V3. This is, again, another very simple strategy. You're just looking for a 2-candle confirmation. I'll see if I can find one here. So I don't think this is a good example here. Or technically this could be a good example. So let's go over here real quick. This is from today, actually, this morning. So let me put the requirements up here, or look for the requirements actually. I should have this set up here. Because this is a strategy that we still apply. I still apply this during regular market as well. Okay, so here are the requirements for the Breakout V3 and the Breakout V3 continuation. I still apply the continuation like till this day during the live session for scalps, but I'll show you the actual Breakout V3. So the way that the Breakout V3 works is you're looking for price to break out in a certain direction. That's the logic behind it. You're looking for momentum and then you're looking for a confirmation after it. So looking at step one. Okay, actually, this is the requirements for it. See if I can find the other one. Or I can just type it up as well. Because what I'm doing is this is a little more complicated because this one uses a V1 variation as a confluence, but you don't really need those confluences. You can just take it just as is. Yeah, because the thing is, if this requirement is followed, then there's gonna be a lot of days where you just don't have entries because the V1s don't always come up like that. Here, I'll just put another one. I'll start it over. So this is Breakout V3 Strategy. So it's super simple. You want to confirm begin, or I'll just look for entry. After identify valid momentum signal, firm candle following information candle. Enter close TP stop loss based market conditions. Again, your TP stop loss is up to you guys. Like you can set it to whatever you like. I know not everyone likes what I do. So if you want to do 50-50, feel free. If you want to do 100-100, feel free. If you want to do what I do, 100-50, you can do that. And that's pretty much it. So, okay, here is, and I'll input the requirements up here soon. Breakout V3, 12, 16, 24. Okay, so let me just go back to this candle because this candle is where I was at. So right here is the breakout strategy. You're basically looking for one of these patterns right after market open. So look for entry after New York Stock Exchange open, which is 6:30 a.m. Pacific time. I have the markup right here where this blue line's at. This is 6:30 a.m. Once this passes, so once 6:30 opens, you're now going to start looking for a momentum signal. So second, you want to identify a valid momentum signal. We have a buy signal right here. This is valid because there's a buy signal with a green candle within it. Step 3, you want to confirm confirmation candle following the momentum signal. So what I mean by that is you want to look for a following candle to be a green candle, basically. So you have a buy signal followed by a green candle. That's a breakout V3 continuation or breakout V3 pattern. Same with this one over here. See how there's a sell signal and it's valid? It's a sell signal with a red candle within it. And then next to it, you have a confirmation candle, which is red. So same with this one over here. Let me just zoom in a little bit. I'm just showing you guys examples of what I'm talking about. Buy signal with a green candle following it, right? This is a confirmation. This is an invalid sell signal. It's a sell signal with a green candle within it. There's no confirmation there. There's a buy signal here with a red candle in it. That's an invalid momentum. Same with this sell signal, green candle, invalid momentum. Right here is a green buy signal with a green candle. This is a valid momentum, but the following candle is red. So this here is it's not a confirmation candle because it needs to be in the same direction. So there's a bunch of examples right there to show you. Not valid, not valid, not valid, not valid. Valid because it's a buy signal with a green candle and it's followed by a green candle. It's confirmation right there. And also valid because there's a red signal here with the red candle within it. And it's followed by a red candle, right? That's what you're looking for. You're just looking for a confirmation of momentum. So With that said, right here we have a buy signal with a confirming green candle after it. When you have this setup right here, you're looking for the first setup after market open, because this is where the volatility is at. Market open at 6:30, we have a valid buy signal. It's a green candle following it. Once you have that confirmed, that's going to be step one. Look for entry after 6:30. Step two, valid momentum signal. Step three, confirm confirmation candle right after. It's a green candle right after it. After that, you can enter here with a buy entry. Your TP stop loss is going to be based on market conditions. So depending on the market conditions here, it's at 27 ATR. If I go, if you want to go 50-50, feel free to do 50-50. If you want to do what I typically do, you can do 100 to 50. If that's what you wanted to do. So here's the markup. Let the trade kind of play out a little bit. It's retracing down a little bit. Then it comes back up for correction. Pushes up a little higher. And there you go, full TP right there. So here goes another breakout strategy. So like I just showed you, there's like three main strategies you can use: momentum breakout, breakout V2, and breakout V3. Those are the main ones. I wouldn't apply the original breakout, but everything else here, you can see how simple and straightforward it is. You just have to follow criteria and you have to understand what you're looking for. So there goes an example of the breakout V3 strategy. Let's see if there was another entry. So this one is for today, it hit. So looking at this here, it kind of makes me wonder if like maybe I should switch the breakout to a different breakout strategy, depending on the market conditions, but I'll have to actually test it and back test it far enough so that I have enough data to see if that's a good move or not. Otherwise, let's go to Friday, or like last week. I'll see if there's another entry here. The thing is, market's been super choppy, so it's not really been, the entries, I think regardless of the fact, it's going to be very tricky to catch these entries that actually play out very well. So this one on Friday doesn't look like it played out. Buy signal confirming candle. No, it's a whipsaw. Let's look at Thursday. See Thursday over here. Okay, so Thursday looks like it might have, no, actually, market open at 6:30. No entry there, no entry there, no entry there, no entry there, entry right here. Looks like this might have played out. This thing took a really long time to hit though. So let's go over here real quick. Here goes the setup. So market open right here at 6:30. Again, you're looking for a signal, a momentum signal that's valid with a following confirmation candle. So right here we have a sell signal, no red candle, no entry there. Buy signal, no green candle, no entry there. Sell signal, no red candle, no entry there. Buy signal, red candle, no entry there. And then right here we finally get an entry. There's a sell signal and it's followed by a red candle. So if you were to set this up right here, this entry came up at 7:03. TP stop loss, like I said, I typically would use a 50 to 100. I mean, it's up to your preference, whatever you guys want to apply. But for me, this is typically what I would have done. And then let's see here if it plays through. So price comes down pretty nice. And then it retraces up. And then it comes back down. And then it retraces up. So this one over here actually didn't play through. So this didn't play through for a 50 100, but it looks like it might have played through with a 50-50. You know what? Looking at the ATR, I think I think it'd be better to take a smaller TP stop loss. Actually, let me go back to the entry right here. Like I said, it's based off market conditions. Yeah, so now that I've looked back at it, the 100 points I think would have been a bad entry or a bad TP stop loss. So the ATR right here, you can see from the bottom is 21 ATR. If you're going for a 100-point move and the ATR is that low, it's going to be very difficult for you to hit your TP because it's not really moving up to 100 points. So I think for this here, the adjustment would probably be a 50-50 instead of a 50-100, because let's see if it goes down from here. So the 50-50 you can see right here actually works perfect. because the ATR is at like 20, so it's super low. And this gives you the opportunity to hit a 50-50 TP stop loss. So this is going to be tough for like the breakouts on open because the ATR is always going to be low. But if you're applying the breakout V3, it's actually going to make sense because you're going to wait for the market to kind of breathe a little bit. And then once the market's like moving around a bit, you'll be able to see like what the ATR actually is. Because if you go over here to open, let me just refresh to see the ATR is always going to be low at this point. It's never going to be high. The only time the ATR will be high is if like there is news. But you can see the ATR here is at 15. So this doesn't really, it doesn't help because we've been taking TPs that are like 100 points and they still hit, but it's on open. But if you're looking at this here and you're basing your TP stop loss off the ATR, it's not going to work well because it's always going to be low here on open. The ATR doesn't pick up until you can see over here market kind of pushed through a little bit. And now the ATR jumped from 15 to 30. So a huge difference right there. All right, so I think those are the examples for the Breakout V3, guys. It's a pretty straightforward strategy. Like I said, you're just looking for a buy signal or a sell signal, and you're looking for confirmation after it. But once you have that, it's pretty straightforward. If you guys have any questions regarding any of the strategies, feel free to, obviously hop into the chat. As you guys know, I'm testing out this new indicator that I created. It's called the Kodi Kai liquidity. It's a pretty fun indicator, actually. I think it works really well. This indicator is going to be really useful for applying the liquidity push strategy. I know a lot of people, they don't know where to get in for these entries. I'll keep testing it. Obviously, I'll be testing it during the live session. So the cool thing about this is that, if you're trying to catch liquidity, like say for example, you're trying to catch liquidity up here, right? Like typically what people would do is they would, like people in the group, they would just like enter their trades like right here at this higher high, right? Because they're like, okay, when price pushes up, that's where the liquidity is sitting. But since I created this liquidity indicator, you can kind of see where to enter when price crosses back up there. So for example, right here, if you're looking to take liquidity, people will typically mark up liquidity like right here. And then they might get in a little early, right? Like somewhere down here. But like this might be a little tricky because you might try to enter right here and price might whipsaw on you. Might come up and then come back down. But now that I have this liquidity indicator that I've kind of put together, what you can look for is instead of entering at these points here, you can enter when price reaches these levels of liquidity that I mark up, and then you can write it to the actual highs, right? So like right there. So again, instead of entering like earlier, you're waiting for the confirmation of price to hit like say this area right here. And you can see how it pushes up and hits TP like that. So the cool thing with this is that you can use these tools to identify certain areas. Like for example, you see how all the liquidity is sitting right here? You can take liquidity at some point like right here, and you can just ride it all the way up to like this point up here. So price comes back to retest this lower level. And then this would be good for a discretionary trader. So if you're trading discretionary, like for example, right here, if price pushes back up, bounces off this area here, pushes back up. See how price reaches this point right here? Because I'm going in the direction of the trend. Now that once price pushes up and fills the orders right there, it finally filled. And look how it pushes up to TP right there. It's so useful when identifying where to make entries to ride it to the highs or the lows, because typically price will come up to like take out the highs or take out the lows. But it's like, okay, where do I enter from? Since I created this tool here, you can enter exactly where the liquidity is like sitting or hanging out. Even if you wanted to enter down here, you could have entered from down here and rode this up even higher. So I'll keep testing this, guys. We'll probably cover this a little more in detail at the next mentoring session. I just got to test it out a little more. I've put this together over the weekend, so it's still very new. It's very new and brand new. I just need to make sure I fixed all the bugs and make sure there's nothing wrong with it. And then once it's all good to go, I'll make it available to you guys so that you guys can use this to your advantage. Because I think this is a very, very strong tool. So for example, price is coming down now. And look where the next targets are. Right here, right? So when price comes down and touches this this area right here, you can go and reach down to this low because price is going to come and knock out liquidity. And when it grabs liquidity down here, it's going to come down and try to knock out. It's going to try to test that low. See how price filled it right there? And then, I mean, it ends up going back and forth. So probably my TP would be like a little bit closer, but again, like I said, it's a work in progress. I mean, this is kind of far off, so I don't think I'd go for that level push. Maybe again, right here, price came back down. So now we have all of these lows kind of just hanging out right there. We got all these lows right there. Again, if price comes down and pushes through this area, I probably want to knocked out. So right here, price finally gets filled. And then you can see right there, it comes down and it knocks out all those levels of liquidity below. So this can be a very useful tool. This is good for discretionary trading. Like if you're just looking to get these highs and lows knocked out, especially during a sideways market, it'd be very useful. And the cool thing about this is that once these zones and levels get knocked out, they get taken off the chart. So you don't have like a super messy chart. So see how price here again is like super messy. You're looking for it to come up and hit that high right there. Price doesn't go up that high. And I think this will be useful for identifying liquidity throughout the live session trading time. So, all right, guys, I think that's it for the day. If you guys have any questions, feel free to hop into the chat. Again, for today, we covered modules 6 and 7. So we did a quick review of module 4, which was directional, sideways, and breakout strategies. Then we covered the sideways strategies, and now we covered the breakout strategies down here under module 7. We're pretty much done with the strategies, guys. So we're getting near the end of the futures day trading mastery class. I mean, we've covered a lot of stuff here. This is day 4. Day 5, we're going to be covering trade psychology, risk management, contract sizes for YM, and then also trading like a business. I think this is going to be a big thing. I know a lot of people have asked me for this over the years, if I can help you guys set up your LLC, if you guys are located here in the US. I think I'll probably offer this as a service for me to set it up for you so you don't make any mistakes and you have everything all set up. I'll teach you how to do everything, how to set up the LLC, set up the banks, which credit cards to get, how to get funding through credit cards, all that stuff. That stuff's going to help a lot with people who want to trade like a business and how you can get deductions and write-offs so that you can basically trade for free for the most part, as long as you make a profit, of course. But all right, guys, I think that's it for the day. If you guys have any questions, feel free to reach out. We've been on the session for a little over an hour, almost 2 hours now. We covered pretty much all the sideways strategies and the breakout strategies. I think this is a pretty good session to go and review in the future. But if you guys have any questions, feel free to reach out. So, all right, guys, if you guys have anything, hit me up on Discord. Otherwise, I will see you guys back here tomorrow.